One lithium stock under $15 and two green stocks under $10. Ganfeng Lithium, Gevo Inc., and Energy Fuels Inc. Are these stocks a buy? You may have heard the news that China's Sichuan Yahua Industrial Group Co. said yesterday, the 29th of December 2020, that it has signed a deal to supply battery-grade lithium hydroxide to electric maker Tesla. So we have this down here, just a reminder that it already sources lithium, that is Tesla, an ingredient in EV batteries, from China's Ganfeng Lithium, one of the world's top lithium producers. And the author of this piece wrote that Yahua's deal underscores Tesla's huge demand for battery-grade lithium hydroxide, particularly in view of the ramp-up of Model Y production in Shanghai, and the Daiwa analyst wrote. So already you know that Ganfeng Lithium is China-based and principally engaged in research, development, and production and sales of deeply processed lithium products. The products includes lithium compounds, lithium metal, lithium batteries, and lithium batteries. Yes, it does produce that. So technically speaking, this is what happened yesterday, the 29th of December 2020. So right now in the pre-market, it's slightly up. So it is trading on the over counter. It's trading on the other mediums, the OTC pink sheets, not trading on the main exchanges. So technically speaking, we have that gnef Ganfeng appears to be in a strong bullish trend. Its 200-day moving average is upward sloping, and the MACD histogram is above zero. Comparative relative strength analysis shows it's outperforming the S&P 500. Momentum for gnef is strongly bullish. The 14-period slow stochastic oscillator is above 80, the level which many analysts call overbought. This means that investors have been actively purchasing shares and driving the price higher. So even though it says here it's the analysis shows that it indicates that it is overbought, it's actually cooling off. And momentum also, we can also see here as well, as in terms of rate of change, price rate of change is also sloping downwards, it's tipping over. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. It definitely has to be a volatile stock. The Bollinger Bands are presently wider than usual as a result of greater than normal volatility that recently accompanied the price move. So, but we can see that it is currently not as overbought as maybe indicated. It's also losing some steam as it concerns price rate of change. And then looking at what's going up here, yes, we can see as of the 28th of December, it was at the high of $12.80, probably its all-time high, definitely the highest it reached this year, 2020. So it has pulled back to $11.70, even though it hasn't pulled back and at least below its short-term trend lines, like the 10-day trend line, for instance. Yes, it has pulled back a bit, but I would prefer to see a better correction, a better pullback. It's not even a correction yet. So a 10% pullback will probably indicate that it is a correction, but I've not seen that at the moment. Everything fundamentally is right. This is where the money is going into. But if you feel confident that it has pulled back enough, then you can jump in. But by the time the market starts trading today, the 30th of December 2020, it might be different. So I would prefer to see a better correction, a better pullback before I concluding in my own opinion that it is a buy. But is it a good buy? Absolutely, it is a good buy, but currently not at this volatile rate. A good correction would be good. So, but if you feel confident about it, just put in a small amount of money, $100, and probably get you something close to 80 shares or thereabouts. Sadly, it doesn't trade options, so you may not be able to do that. So if you feel you can't wait anymore, and you want to test what's going on, test the waters, yes, you can. Put a small amount of money, not a lot of money into it. So let's move on to the next one. The next one is Gevo Inc. It's engaged in commercializing jet fuel, gasoline, and diesel fuel. The company's fermentation yeast biocatalyst produces its isobutanol through fermentation of renewable plant biomass. It operates through two segments: Gevo Inc., Gevo segment, and Gevo Development Agri segment. So we'll see what's going on technically with energy free. Oh, sorry. No, sorry. That's the wrong one. Gevo Inc. So since it's trading on Nasdaq, there's a good chance that you may have options available, and we can see what's going on here. It has a market cap of $552.7 million, 119.628 million shares are outstanding, and it does have the data on short interest. It's 7.5%, 7.54%, which is not so wonderful, but at least something. It's an indication that there is some skepticism towards the equity. So that's good. Now we can see that, we can quantify it. So technically speaking, Gevo appears to be in a strong bullish trend. Its 200-day moving average is upward sloping, and the MACD histogram is above zero. Comparative relative strength analysis shows that the issue is outperforming the S&P 500. So momentum for Gevo is strongly bullish. The 14-period slow stochastic oscillator is above 80, the level which many analysts call overbought. This means that investors have been actively purchasing shares and driving the prices higher. No doubt about that. We can see it's right in the green overbought territory over here. And we can also see that the momentum is also quite strong, even though of late it has lost a little bit amount of steam. But you can see its price rate of change is 152.5%. So it is definitely it has a strong momentum, no doubt about that. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. And it's also definitely quite volatile of late. The Bollinger Bands are presently wider than usual as a result of greater than normal volatility that accompanied the recent price move. Events such as this may result in a pause or reversal in the near-term trend. So I think we have, let's see what we have here. Okay, so it has its closure today, the 30th. It says here we've entered into an at the market offering agreement dated February 13, 2018 with HC Wainwright and Co. relating to the shares of our common stock, par value at $0.01 per share, offered by Prospectus supplements and accompanying the prospectus. In accordance with the terms and sales agreement, we may from time to time offer and sell shares of our common stock, having an aggregate offering of up to $150 million through HC Wainwright as our sales agent under this prospectus supplement and the accompanying prospectus. So they are doing some price offering, so we will include this link for you to have a look and digest that. So definitely the stock is on fire. You can see it's how it has escaped its near-term and short-term averages. So, is it a buy? I would say yes, it is a buy in the long term, but not today. Not today. It's not a buy today, based on what's going on. It has become so volatile. It says, and then you can see yesterday, the 29th of December 2020. It's a 52 week high was triggered at $5.13, but since that time it has corrected. So that was okay. The 28th, it was okay. So it reached, but it did not close at that price. So I wouldn't even still say that it is enough correction. So Gevo is a stock to watch. Be patient, and just like the previous one, ganfeng. If you can't wait, just put a little amount of money into it and watch what's going on, and don't commit your whole budget into Gevo. Definitely, Gevo is the stock to watch. Definitely, Gevo is in the right business for currently. This is it's in the space many market participants are observing and have the keen interest in. So for now, we would say it's not a buy, but like I said, if you really have the fear of missing out, commit a small amount of money, nothing more than $100. It will get you a handy amount of money of the stock. So we watch it from there, and observe it. If it pulls back and consolidates and cools down, you might find that it might be a better time to even commit more money, because what seems to happen is that when they have corrections and pullbacks, more and more market participants who have been patient and waiting even jump in. So if you want to go ahead and put in some money, put a small amount of money. But for us, it doesn't seem to be a buy for now. But in the long run, it is a stock to own. But for now, I wouldn't say it is a buy. So the next stock will be Energy Fuels. So you can see Energy Fuels Inc. It's in the oil and gas and consumable fuels, but don't be carried away by that. Its Energy Fuels is engaged in conventional and in situ ISR uranium extraction and recovery, along with the exploration and permitting and evaluation of uranium properties in the United States. The company operates through two segments: ISR uranium and conventional uranium. It conducts its ISR activities through its Nicole Ranch project located in northeast Wyoming. So technically speaking, it's currently trading in the pre-market. It's currently up a small amount. We can see about 2,300 shares have been traded so far. So the good thing also, it's also trading on one of the main exchanges, New York Stock Exchange, and also we have a short interest of 9.65%. So just like Gevo, it's trading at $4 and some fraction, and it has that short interest, indicating that there is some skepticism towards the equity, which is good. It has a market cap of $557.17 million. So technically, its trend analysis shows that Energy Fuels appears to be in a strong bullish trend. Its 200-day moving average is upward sloping, and the MACD histogram is above zero. Comparative relative strength analysis shows that the issue is outperforming the S&P 500. Momentum for Energy Fuels is strongly bullish. The 14-period slow stochastic oscillator is above 80, the level which many analysts call overbought. This means that investors have been actively purchasing shares and driving the price higher. So yes, we can see it's in overbought territory, but it seems to be losing some of that steam as well. We can also see that The momentum is in as regards price rate of change, a much more a higher order of that parameter indicates that has a price rate of change of 48.6%, which means that even though it says the momentum is strongly bullish, it's also waning as well. The unbalanced volume indicator is bullish. The slope of the indicator is positive and suggests that buyers are presently more active than sellers. So its momentum was higher before. Sometime it was 84 or thereabout, 84%. But currently it's down to 48.6%. So it's also a slightly good indication, indicating that volatility may not be that crazy, but like it was before. So so is it a good buy? Definitely, it's in the long run it is a good buy because as we all know, it's a green and renewable. It's in a green and renewable business, even though it's nuclear, which is a bit more dicey and risky. But the interest is there. People are keen on renewables and green tech and their stuff and their like. So, but given the volatility that has played out of late, we wouldn't say that it is a buy for now. Just like the other ones, and just like we've been indicating before. Wait for a pullback, wait for a correction before you jump in. And if you really can't wait, like I said before, in the last two cases, do not commit a lot of money. Just put a small amount of money, nothing more than $100. That's our advice. That's our opinion, and just watch and see what's going on. From there, there's a good chance that with time it might pull back and correct or consolidate and jump in. But if you also feel that this decline it had yesterday, the 29th of December 2020, is akin to what has already happened, what has been happening since November. You can see these declines, you can see these pullbacks, even though they are not major. If you think that is likely what is going on right now, that time you can't wait that it is going to even rise further. Like I said, do not commit a lot of money, and just I wouldn't say that would be a big loss if you lose $100, so because there will be losses. So go ahead and do so. It's in the relevant space at the moment. That's where a significant section of the market of market participants are observing the green renewable space. So yes, in the long run it is a buy, but for now we wouldn't say it is a buy based on its volatility at the moment. So if you're new to this channel, subscribe, like and share. If you're already subscribed, thank you very much for watching.